Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, market analyst at FX Pesa. So feel free to join in, and once you join in, kindly say hi on the live comment section, and this will confirm that everything is working just fine. So I hope everyone enjoyed their Easter holidays, and now we are back into a new week. I know it's already Tuesday, the 2nd of April. And of course, it's the beginning of a new month and the beginning of the second quarter of the year 2024. So today, we will be starting with a disclaimer. And as we all know, these sessions are purely educational. They are not investment advice. They are not a recommendation to trade. So always do your own due diligence and practice proper risk management. So with that, I think we can begin right away. Hello, Javan Bella. Thank you for joining. Niko sawa kabisa. So I'll be starting by focusing on a couple of things. And one of them is basically the economic calendar, try to understand what are the key events impacting the markets today. And once we cover that, then hopefully we'll do some technical analysis, try and understand what's currently happening with gold, what are the opportunities, and how can you position yourself. Number of news announcements. And this began as early as 1:10 a.m., where we had a speech from the Reserve Bank of Australia Assistant Governor. And then later on, an FOMC member, Cook, had a speech, but both of the speeches didn't have any major impacts in the markets. So later in this afternoon, we have seen the German preliminary CPI, which is a measure of German inflation, which basically showed that German inflation is slowing more than expected. And this was very much welcome within the German economy. So as you can see, inflation as far back as April 2023 was trending high at 7.2%, and then started dropping to 6.1, stuck high at 64, 6.2, and then 6.1, before we started seeing significant drops in inflation. And this is the lowest number we have seen in about 3 years. So it's a much more welcome data, especially considering the fight that Germany has been having against high inflation. And now I believe Germany has almost eclipsed the target of 2.0%. So with this in mind, we also had more data coming in later in the afternoon. And as you can see, we have seen both manufacturing PMI for Switzerland as well as for the Eurozone. Then later on, we saw the manufacturing PMI for the UK. So for the UK, it was a big surprise, a big jump from 49.9 up to 50.3. And this crosses a crucial mark of 50.0, which is the midpoint between expansion and contraction. So officially, the UK manufacturing sector is in an expansion zone. So for the Eurozone, we saw 46.1. It was a good improvement from the previous reading, which was 45.7. And then for Switzerland, it was 45.2, an improvement from the previous reading of 44.0. So going forward, the key data point that everyone will be focusing on will be the job openings in the US at 5 p.m. And this is basically the measure of the number of job advertisements that are currently being advertised within the US economy. And it's a leading indicator of the trends in the job market sector. So in the previous reading, we had 8.86 million job applications, and we're expecting this to reduce further to 8.76. So when more companies are basically advertising jobs, it means that there is something big happening. But then if there is less companies advertising for jobs, basically means that the job market is softening. So from what we can see in this trend right here, you'll notice that there has been a general decline since we saw the top in May 2022. And this decline is basically implying that the job market is softening. So a toughening job market, where let's say there is more demand than supply, then you tend to see more advertisements. And this was the case right after COVID. So you can see in 2021 through to the early parts of 2022, this is when we had the strongest growth in job advertisements. But now that we are seeing this number weakening, it means a softer job market, which basically implies that the Fed is getting closer to achieve its targets. So that means that things are moving well, and we could start seeing the dollar starting to weaken. However, this is not the only key indicator. A majority of investors are majorly focused on inflation reports. And from the last inflation report we got last week, it was not very good. It was not indicating the right movement in the general price of consumer goods. So with the general price of consumer goods continuously rising, it makes the case very difficult for the Fed to begin cutting interest rates. And as a result, that may explain why we are seeing the dollar being currently very strong. So that's one of the key focus for the day. But then if you now look forward and try to get a bird's eye view for the week, I believe there will be a lot of Fed members speaking for the better part of the week. So later this afternoon, we will be seeing FOMC member Bauman, then Williams, Meister, and Daly speaking within the same day. So if we fast forward, then you'll notice that there will be more speeches on Wednesday. One from Fed Chair Powell, then FOMC member Barr, FOMC member Kruger, and as we head further down the week, even more speeches from FOMC member Bakin, FOMC member Meister, and FOMC member Kugler. That is on Thursday through Friday. And then the biggest news of the week will be the US non-farm payrolls, which will be coming in on Friday at exactly 3:30 p.m. And the report will be coming at the same time as the Friday's job market report for Canada. So just give me a second. I need to address the noise in the background. All right, that's done. So hello, Joseph Ngugi. Thank you for joining the session. I really like that you've all started with good questions. I'll be addressing them as we progress further with the presentation. So among key highlights for the week, I've done a summary. This is something I did early in the morning on Twitter. And these are the top things to watch in the markets this week. So the first thing is Tesla, which is down 29.47% year to date. The company is due to announce its Q1 deliveries today, and analysts are expecting the company to miss delivery projections, and this will be the first time in about 3 years. So there will be a General Electric spin-off, basically the company dividing into two, which will see the company separate into two companies. General Electric will remain. Forgive the typing error here. So the company will be classified under aerospace, and then the second company will be Vernova, which will be home to the gas, power, and wind energy business, and that will be launching today. So the new company will trade under the ticker symbol GEV, and it will join the S&P 500 immediately. So German inflation report at 3 p.m. We have already seen these, and it came in weaker than expected, meaning that Germany is winning the battle against inflation. Then the US JOLTS job openings at 5 p.m. We have already discussed this. Then Wednesday will be busy with Eurozone's flash inflation rate, the US ISM, or what we call the Institute of Supply Management PMI report, then the EIA crude oil as well as the gasoline report. There will be an OPEC meeting on Wednesday, and speeches from Fed members, Goolsbee, Powell, Barr, and Kugler. So on Thursday, it will be a busy day focusing on the Swiss inflation report, US and Canadian balance of trade report, and of course, we'll be looking at the US initial job press claims before we focus on more Fed members presenting speeches, and this is FOMC member Bakin, Goolsbee, and Meister. So on Friday, all eyes will be on the US non-farm payrolls as well as the Canadian jobs report. So on the earnings front, we'll be looking at a couple of companies reporting their earnings this week. So one of them is Carl Mein Foods. We'll be looking at Levi Strauss. We all know the company that makes the strong jeans. Simply Good Foods and Equity Brands will be the highlight this week. So on price updates, we know that there has been a big sell-off in Bitcoin, down 4.58%. to around 66,490, and this is as per this morning. Gold hit an all-time high yesterday on Monday, but also today it has continued to form a new all-time high. The DXY, or what we call the dollar index, is on a 5-month high of around 104.792. Brent oil hit a 5-month high of $87.6 per barrel. The S&P 500 and the Dow Jones Industrial Average hit new all-time highs on Monday, but the Nasdaq did not hit a new all-time high. So the USD JPY is at 151.7, which is dangerously close to an area where the Bank of Japan or the Ministry of Finance has intervened previously. Chinese technology company Huawei is recovering strongly from the area impact of US sanctions, with sales up 9.6% and net profit up 144% in 2023, company figures released on March 29 show. So this comes after they jointly developed the Kirin 9000 7-nanometer microchip that was sourced and manufactured fully in China. So those are the key highlights for the week. And now that we are done with that, I believe it's time now we shift over and start focusing on the technical analysis. So now I'll be shifting over and try to share my MT5 trading platform. Then from there, we can cover some ground and hopefully everyone will benefit from this session. So the key highlight for the day, or the key market mover, is Brent oil, which has managed to make a big rally since the open of the market at around 87.488, hitting a new high of 87.807 before pulling back in the last 3 hours. So Brent oil has been pretty bullish, and there has been quite a number of reasons why this has been the case. And this is following the escalating tensions happening in the Middle East, as well as the tensions happening in Russia-Ukraine war. So before I move any further on the MT4, I'll be sharing yet another screen, and in this case is to explain the oil case scenario. So we can already see that there's a breaking news that has just happened right now. Tesla shares dropped 7% on first quarter vehicle delivery and production report. So this was just released after I already started this session, so I didn't have time to cover the numbers, but we'll be checking it out anyway. So oil prices climbed to 5-month high on escalating Middle East tensions and fresh supply threats. So international benchmark Brent crude futures for June delivery traded at $88.58 per barrel. US WTI, or the West Texas Intermediate futures with May expiry stood at $84.97 per barrel. So Brent futures have largely been trading in a narrow interval between 75 and 85 per barrel since the start of the year, but the heightened geopolitical risk and robust economic data appear to have prompted a move higher. So one of the reasons we are seeing this happening is because we have seen Ukrainians striking what I would describe as Russian oil infrastructure. And of course, we have all been following the Israel-Hamas war and how it has destabilized the region. And that explains why we are seeing such volatility in oil prices. So just looking for one more article. This is Ukraine war live updates. Ukraine strikes major Russian oil refinery, and this was today. Belarus starts military deals near EU borders. So with these escalations, it may explain why we are seeing such a big move happening in oil. And of course, for the breaking news for the day, this is what's happening with Tesla. According to a mean of 11 estimates compiled by FactSet, analysts were expecting deliveries of about 457,000 cars for the first 3 months of the year. So a consensus of 30 estimates sent by Tesla Investor Relations over the weekend to select investors indicated that analysts were expecting a mean of 443,027 deliveries and a median of 431,125 deliveries for the quarter. So the actual data that came in, the total Q1 deliveries missed by a lot. This was 386,810 number of deliveries made. And of course, for the production, it was much higher. So it means that Tesla has been producing cars as projected, but demand is low. That's why they are having lower deliveries. So the shares dropped 7% in pre-market trading. Tesla doesn't break out sales of its vehicles by model, but reported that it produced 412,376 Model 3/Y cars and delivered 369,783 of those cars. So it produced 20,995 of its other models and delivered 17,000 only. So in the same period last year, the electric automaker reported 422,875 deliveries and production of 440,808 vehicles. So in the fourth quarter of 2023, it was almost half a million at 44,507 deliveries and production 494,989 vehicles. So this was a big miss, and this may explain why there's a big sell-off in Tesla shares. So that being said, we will continue. I think we have covered sufficiently the key breaking news for the day. So we can go back to the charts now and try to see what way forward. So for Brent oil on the daily chart, this is how it looks like. We are still on this daily trend line. The charts have not yet hit that resistance. So there is still more room for upside, but also there is key levels to consider. For instance, this high that we saw in August 2023. So the market has already broken that high and is now headed for the upper trend line, somewhere around 89.837, or even the round number, which is $90 per barrel. So considering that there's an OPEC meeting happening later in the week, there's still more room for upside for this particular asset. So I expect this bullishness to continue over the week, and the pullback is a welcome addition, especially when you don't want to buy the absolute top. So it may happen something similar to this. Market makes a pullback and then eventually picks up momentum and then continues with a nice extra leg. So if this becomes the case, or the trend in trading Brent oil, then from this area we should start looking for signs of bullish entry. It doesn't mean that we go in with a full buy here. It means you be patient and wait to see if there will be an opportunity showing that buyers are entering the market again. So that being said, the other asset, which is the title of today's presentation, is gold trading against the US dollar. It made quite an impressive rally last week and formed a new all-time high at $2,265 per ounce of gold before erasing some gains on Monday evening. And now today you can see gold pushing high up again, slightly forming a new all-time high just above 2265. So in this case, we hit 2266. And since then, the market has been attempting to pull back downwards. So yes, there is a potential formation of a double top formation, but then the bullishness in gold seems to be extra strong this year. And with this strong momentum happening, it doesn't make sense to be looking for short selling positions. So in such a market, it's usually risky to go in for bullish positions, because a reversal could happen unannounced. But then it's also riskier to start shorting a market that is currently very strong. So the better alternative is to ride the wave no matter where it takes you. So in this case, from the forward chart, it's clearly indicating very strong bullish momentum, and the bearishness after hitting this new all-time high is not holding its weight. So if you use the 15 minutes chart, the market hit this area here, reversed immediately, and it did not continue. So what the market has been doing is playing around this area here. And as we approach the open of the New York session, there's a good chance that gold will be going for yet another all-time high. So from the 1 hour chart, we have had two bearish candlesticks. On the 15 minutes chart, we have seen 30 minutes where gold has been bullish, crossing higher and higher. And in this case, we could be seeing a continuation. and a formation of yet another leg. So there is still some good likelihood that gold continues with this strong momentum. And as we mentioned, when the market breaks a new all-time high, we don't have candlesticks on the left. And that means that we use the prevailing candlestick patterns to mark our estimates. So as per the last previous all-time high, which was right here, and then the other all-time high that we saw on Monday, we already have a trend line. So for intraday trading, it basically means that there's a nice target along this trend line. So this means that this price could continue pushing higher until it gets at least to this area here, and perhaps even break that trend line and continue moving higher, depending on the bullishness that we experience in this market. So for the day, it seems likely that the market will be going for 2,276, and this could be a nice position to take advantage of once the markets show a continuation of this trend. So US equities have been bearish, extremely bearish. Remember, the Tesla shares is a part of the Nasdaq 100, and it has quite a strong weighting. So in such a case, when there's big bearish momentum, then you know not to go against it. So we can already see something happening here, and the market potentially breaking this and eventually going for this lower trend line here. So I'll be zooming out so you can understand the lower trend line. So this has been a channel. The market has been switching between the two trend lines. And in the most recent high, we were not able to form an exclusively newer all-time high. So what we are seeing here is the market weakening, and this is the Nasdaq. And now there's a good chance that the market gets to the lower trend line and potentially breaks it. So before we start betting on a break of that trend line, it basically means that there is a good chance of riding this momentum up to this area here on the lower trend line, and then we observe the price action to see if there will be a break. So a good chance that the market drops to 17,961. So we have seen the US 30 also being extremely bearish this week, that is yesterday and today. And now that we've broken a major support area, there's a good chance that the market continues along that path. So the support area was also the resistance area here. So now it seems more likely that the market continues with this bearish until we get back to the lower trend line, and the price level at the lower trend line is around 38,865. So as for the S&P 500, we had this area of our intersection as our major support area, both on the trend line and also on the previous support here. And the current candlestick is indicating a clean break. So if the market was to close below that, then the next target is 5,186 with a potential break in play. So in this case, investors have been waiting for some nice pullback in the last 2 weeks. They didn't get a major one, and now we are getting a major pullback in the S&P 500. So why not enjoy the pullback? So European equity indices are also bearish, and for the Euro 50, it's almost breaking the lower trend line. So the trend line has been holding for a while, but then the current selling momentum is indicating that there could be some more selling pressure. And if this persists, then a target of 4,989 might play out. For Bitcoin, it has also been bearish. So after trading in this channel for a while, it found a triple top formation where it was unable to break this area for 3 consecutive times. And then after the bounce here, we saw the big break happening early this morning, and everything else has been a sell-off. So now, in this case, after the breakout, it makes more sense to target this area as a nice entry point for a potential buy position. But then, as per now, the price action is indicating some further downside pressure. So as for the French 40 index, we are seeing a big sell-off here. So this trend line might eventually play out as the key level support. So we could be seeing some further downside with this bearish momentum extending all the way down after the formation of the double top yesterday. So you can see the first top here and the second top here. Market breaks out to the lower side and proceeds to drop quite aggressively. And now this trend line that was holding here might become the new target for the short sellers here. So a price level of about $8,080 per share of the French 40 index. So as for the dollar trading against the Swiss franc, we have seen the Swiss franc continue losing, especially 2 weeks ago after they made a surprise rate cut. So following that, market consolidated for a while. You can see the consolidation, followed by a continuation, market held ground for a while during Easter, and then rallied on Monday. Today continued with the rally, but right now it's making some form of step back. So the idea is to wait for the pullbacks to enjoy the rally. So in this case, as the market pulls back, it makes more sense to be patient and wait for the right opportunity to go for a buy position. So as for as for the pound yen, we are seeing the market holding this area here as a key level support, and any attempts to go up are being met with selling pressure, meaning that there is quite some fear that the Bank of Japan may be considering to intervene in the currency market. So the best way to address this is by focusing on the USD JPY, and it seems more likely that there is a very strong wall here of supply in the market, and it may explain that why for the first time in the year we are seeing the USD JPY moving sideways on a constant basis. So what I can say is that these 10 days have been extremely sideways for USDN. And in this case, speculators are attempting to break the price towards the upper side. However, that is not happening yet. So from the 1 hour chart, this is how it looks like. There was a big momentum up followed by a big sell-off, then some sideways momentum with a lot of tails on the lower side. So you can see the number of tails that are touching this area here. And now that the market is unable to break this area towards the upper side, then the only logical conclusion is that the yen at least strengthens for a while, but then the key level trading ideas will be coming up if the market happens to break this area here. So a break above this area would present a nice buying opportunity, and of course any breaks below this area here would present short selling opportunities. So as per now, we can all assume that the USD JPY pair is trading within a range, and this is the range right here. So it's a period of sideways momentum where the price is neither going up or down, but then we'll be waiting for those breakouts to enjoy the burst of momentum that comes out of breaking those zones. So as for other currency pairs, for Euro USD, I remember mentioning that after the breakout, there is an expectation that the market drops towards the previous bottom. This did not happen. The market dropped for a while, but moved all the way back before continuing. So sometimes you may have to be patient with these charts. So now we are seeing a pullback here versus continuation, pullback, but then we have not yet hit the major support area here. So the upside might be limited for a while. So you can already see some trend lines forming within the trend line. So now as the Euro USD heads higher, I would be more patient looking for more short selling positions, or basically betting on a strong dollar. So this area would be pretty interesting to start looking for short selling positions, especially during the New York session. And this is if you see evidence of sellers entering this market. So for pound USD, we were accurate last week when the market bounced, and we targeted this area as an entry point for a short selling trade. So the market delayed before it got to the target, and then yesterday got to this target. So the trading to this target area here, it broke immediately, traded sideways, moved back to retest the area, and now what we are seeing is a continuation. So in this case, my overall expectation is that the pound continues losing to the dollar, and we at least get to another major support area, and this could be as low as 1.25172. So if you think of this as a break, retest, and continuation, then the overall expectation is after the retest, the market now drops to the previous support again. So USD CAD is showing some very strong resilience around this area here. So we can all see the number of times that the market has attempted to break that area. So in the last swing, it was unable to break, dropped all the way down. And then on Monday, we bounced from this support area. Market rallied halfway, but then after that, it got some resistance and has been unable to break above that. So now what we are seeing is raging market conditions, But then with strong oil prices, there's a good chance the market could reverse back downwards, given the strong correlation between the Canadian dollar and the oil prices. So I believe I've covered a majority of the assets I needed to cover. One more, the UK 100 or the FTSE 100. I think it's the most bearish pair or asset we have seen. So after the big spike, you can already see the shooting star indicating a strong rejection of higher prices. The second candlestick on the forward chart is a rejection candle, a confirmation candle, indicating that sellers have strongly entered this market. And this is an indication that prices could now be headed much lower. So in this case, even if I clean my chart, then I come back to the same area. I'm hoping everyone can see this. So the green candlestick has a very long tail towards the upper side, indicating a rejection of higher prices. Red candlestick confirms the entry of bears in this market. And from the daily, this is how it looked like. So if the market was to cross this way, then this is a really nice shooting star, indicating that the market is now headed back lower. So if the market is headed back lower, then where is the target? Where should we be focusing our energies on? So the lowest price that we saw on Friday, Thursday, and Wednesday was the same bottom, and it was also the same top when the market was going up. So this seems like a really nice and interesting area to use as a target if the market is going to continue with this bearish momentum. So that's it for the day. Thank you very much, guys. Let's see the questions you have raised and try to address them as we approach the end of the presentation. So for Javan, my first time to join you live. Thank you for joining. Remember, this particular session happens on Tuesday at 4 p.m. just before the New York Open. The New York Open happens at 4:30 p.m. However, besides these, we have other sessions running daily, Monday to Friday, and they all happen at the same exact time, which is 11 a.m. And hopefully you subscribe to the channel, set notifications on, so that whenever we have a live session, you will be notified. So a good question here, is the Fed likely to cut interest rates this year? It's highly unlikely that the Fed will consider cutting interest rates later this year, mainly because of the strong inflation numbers we are seeing over time. So I believe I had an article somewhere talking about the inflation. So let's see if I can find it. It was somewhere here. Yeah, the PCE. So key Fed inflation gauge rose 2.8% annually in February as expected. So the personal consumption expenditures price index, excluding food and energy, increased 2.8% on a 12-month basis and was up 0.3% from a month ago, matching estimates. So core PCE was up 0.3% for the month and 2.5% at the 12-month rate compared to estimates of 0.4% and 2.5%. So this inflation number is still significantly high, and with oil prices continuing to climb higher, then it makes it really difficult for the Fed to consider hiking interest rates. When is the US election date? I think this is something we can simply Google. It's November. I don't know the exact date. Good question from Boomba, Fred. Why BTC fall like that? As per the records we have today, there is one big company that has been selling out of Bitcoin every day, and it's called Grayscale. With Grayscale continuing to sell its Bitcoin in the open market, we have seen other hedge funds or other ETFs continuing to absorb this supply. But then, as per yesterday's numbers, they did not exceed the Grayscale supply. So if Grayscale is selling more Bitcoins than other ETFs are buying, then that tends to drive prices lower. So the main reason that Grayscale has been selling its Bitcoin holdings is because its pricing is too high. It charges 1.5% annual management fee. So with the new ETFs that were licensed in December and January this year, they are charging very low fees of about 0.25%. And not saying investors want to continue holding on to grayscale. So what we are seeing here is a rotation where you sell your position in a company that charges you high fees of 1.5%, and then investing that money using another ETF that charges you a smaller amount of 0.25%. So this rotation may continue for a while, but then once it's completed, then we should continue resuming the bullish trajectory. So hello, Patrick Wangari. So when is the US presidential debate date? I haven't checked that out. I don't closely follow the elections unless there's a major thing happening. Top currency pairs to focus on today and this week. This seems like a good question, like a personal favorite. So I think I've addressed one of the key highlights. The FTSE UK 100 index is the best or the most interesting asset in the market right now. An easy short on the forward chart it's an easy short. On the daily chart, it's an easy short. So I don't see any reason anyone should not be considering it. On the daily, that's how it looks like. On the 4 hour, that's how it looks like. On the 1 hour, it's a clean sell-off. So that's something to consider for the day. For the week, Brent oil seems more likely to be a nice target. So now that we are seeing the pullback happening, I expect a continuation of the bullish momentum. So there should be some chances to squeeze in a bullish position in Brent oil. Then for gold, I expect a potential break right now. So now we are seeing a period of 45 minutes where the market is still moving higher ahead of the New York Open. So the market has just opened 6 minutes ago. So the potential for the market going for a new all-time high and hitting 22.76 is becoming even more realistic. So another asset you should be focused on is USD JPY because there should be a potential breakout out of this range. So NFP week is here. Some analysts on Bloomberg were of the view that the US may be in recession, going by the over 167 down revisions. How would these affect trading? So if the NFP numbers we have been getting have not been real, and I believe that's so because they have been revised downwards in every single reading over the last 12 months, then it basically means that the job market is not as strong as they are advertising. However, there are new entrants to the job market, and this is the current crisis of illegal immigrants. So they might be plugging in some of the spaces that were missing employees. So the economy is currently pretty strong from the GDP numbers we saw. So I wouldn't believe the economists saying that the US is in a recession. So one key indicator is the short-term US treasuries that are currently on a very strong rise, and that tends to indicate the scarcity of cash. So for right now, I think it's better to just enjoy riding the strong dollar. So I'm sorry I hadn't highlighted the question, and this is it. So a recession is something that has been happening for a while now. We saw it happening with the UK, we saw it happening with Japan, but they did not have as much impact as the central bank decisions, as well as the inflation reports. So pair these with concerns over the growing fiscal deficits in US, i.e. the all-time high debt and all-time high interest rates. So right now, I don't think the markets are as reasonable as we would be. For me, in my entire trading career, I've never seen gold breaking new all-time highs when the dollar was strong, Bitcoin was strong, or stock market indices are currently on a very strong rally. So it's one of those scenarios where markets don't really make sense, and you don't have to make sense to be right. You only need to follow the trend and make money from these markets. So in this case, I would prefer just following the prevailing trends, but also being careful for any potential reversals. So hello, Tony Corrier. I'll try and be faster with the questions because our time is almost up. For the Fed dot plot, I don't know how to explain it. I've had quite a busy week with a lot of events happening at the same time. So that explains why I haven't presented this to you, but hopefully I'll do it this week. Spot on gold. Spot on gold. This is nice. Thank you. This is Day Trading Africa. Hello, Rufus. How was your Easter holiday? That was crazy. I think I enjoyed the Easter holiday proper. So NFP week is here. Some analysts in Bloomberg were of the view that the US may be in a recession, going by the over 167K jobs down revisions. How would this affect trading? I think I've addressed this already. So I don't expect the recession sentiment to move the market as much as other news such as the non-farm payrolls, the CPI and the core PCE price index, as well as the Fed decisions, including the Jerome Powell speech later in the week. There's a request for Euro CHF, XAUUSD. The New York session, as I mentioned, it's opening at 4:30. Telegram channel. Okay. Let me see if I can find the link as fast as possible. So there is the link in the comment section. What is the probability of gold selling like Bitcoin? No, there's a lot of demand, especially coming from central banks, as well as other financial institutions like hedge funds and banks that are trying to hedge their positions where they are currently overexposed in gold, real estate. Sorry, they are exposed in real estate, in US equities, and bonds. They are all presenting some risky indications. So when people are uncertain and there's also geopolitical tensions, that's when they tend to buy gold as much as they can. I don't think they will be quick to sell. If something bad is happening in the markets, there will be probably more demand in gold. Didn't the USA president commit to release more oil from its strategic oil reserve? Would this grant the raise in prices? The current level of the US strategic oil reserve is significantly low. It's not at the same level it was 2 years ago when the current US President Biden decided to tap the oil reserve. So right now they don't have as much. So even if they try to support the market, there's a good chance that investors will be betting against them. So BOJ seems likely to step in for the yen. Should they do so, USD yen will definitely be bearish. What will be the impact of pound yen? It will also be bearish. The thing is, they don't comment, they don't announce. I think if you check financial juice, they had some commentary early in the morning. So I'll be sharing that with you on the live comment section. Just check the financial juice website. The link is there, is in the comment section. And I think I've addressed all the questions. So AUDUSD and Euro CHF are the last remaining questions. So for AUDUSD, also a currency that was trading along these two trend lines, managed to make a break here last week, pulled back, but then continued, and now it seems like we are going for yet another retest. So after this break and then the market playing around here for a while, it seems more likely that a new pattern within the pattern is forming. And if you really look closely and just try to connect the previous highs, you notice that there was a high here followed by this. Of course, if you try to do the same for the lows, then you notice that there is some form of channel being formed here. So while right now the Australian dollar is strengthening against the US dollar, then at some point we should be expecting to see the reverse of the same. So if I remove this, now we know that the market is now currently on an upswing and could potentially start changing direction somewhere around this area. So that's it for the day. Thank you very much, guys. Thank you for your time. I hope to see you on the next session. Remember to like the video, share the video, and of course, I'm making an official invite to an event that we'll be holding over the weekend. The event will be held at Sarit Center. This should be on Friday. So I'll try and share my screen. So in this one, we'll be partnering with Youth Connect Africa. We'll be talking about investments, invest but where, unlocking the power of alternative investment options. I'll be co-hosting the event with Stacy Njimu, and the event is not free. I know all our FX Pesa events are free, but for this one, with this partnership, the event will be costing 1,500 shillings and 1,000 for students. It will be running from 5:30 p.m. to 7:30 p.m. at Sarit Center this Friday. So thank you, guys, and I hope to see you on the next session.